In this presentation, we will continue on with our analysis of the forms within the vendor section, this time taking a look at the purchase order within QuickBooks Online. Here we are in the free version of the software for Craig's Design and Landscaping, which you can find by browser searching for QuickBooks Online Test Drive. We're now going to be going over to the desktop version so we can analyze the vendor section in terms of our flow chart. Now you'll notice in the vendor section it got a little bit more detailed up top because now I have added inventory features. So instead of just seeing what we saw last time, as you might see in a service company, which is the enter bills and then the pay bills, we have this other line up top. And the other line up top would be with regards to purchasing inventory. So now we have to purchase things of inventory, which is a little bit different than paying normal type of bills. And we're gonna have to track that inventory. So how does it differ? Well, if you purchase inventory, typically it's a little bit different than if you were to just purchase something yourself. For example, if you purchase something on like Amazon or something like that, typically you make the payment to Amazon at the point of purchase and then you trust them to ship you the goods that you have already paid for at the point of purchase. And therefore there would be a transaction. So if that's the kind of business you have, there would be a transaction at the point in time that you purchase the inventory. But sometimes if you have some substantial pull as the purchasing inventory, you may be able to actually order the inventory before you pay for it. So if you think about purchasing something in China, you're purchasing a multiple amount of goods that you're going to be selling here, then it may be the case that where you could set up that you're going to say, hey, I would like you to ship me this many mugs or something like that, cups up to us. And then once we receive them, we will then make a payment on that. So in that case, then you're making a request, but you haven't actually paid at that point in time in a similar fashion as that would be like you ordering something on Amazon or some online store and not having paid it until you actually get the goods and you say, this is good, Amazon. You sent me the proper goods. Now we'll pay you, right? That's kind of how this would be set up if you have inventory and you're buying bulk inventory. So you got to keep that difference in mind. And the form that would drive that would be the purchase order. So if we were going to be purchasing like cups from China and we're going to have them ship over to us in the US, then what we would say is here's the purchase order. We would like to order this many cups and request those cups. Once they get to us and we have them here, we'll count them and whatnot, see if they're in accordance with what we've asked for on the purchase order, and then give payment at that point in time. So in that situation, you would basically be using a purchase order. And the funny thing about a purchase order is there's no actual financial transaction related to it. It's a form with no other financial transaction. In other words, notice all the other forms we looked at. When you populate these forms, then it created a journal entry. The journal entry is something that would then be formatting or affecting at least two accounts on the financial statement, having an effect on the financials. The purchase order does not. It's something that we want to enter. It's something that we want to generate. It's something that we want to track. But there's no financial transaction happening because we don't have the inventory yet. It's not here clearly. We're just requesting it, number one. And number two, we haven't actually paid for it. We haven't made a payment at that point in time that we made the purchase order. So there's no financial transaction happening. However, there is an informational transaction where we want to track. We want to tie that purchase order, that request for the goods, to the actual receipt of the goods. And we would expect then, if the cups were given to us, if they gave us the cups, then we would expect to receive them with a bill, right? We'd have the bill and the purchase order, and then we would enter the bill. So we'd want to tie the purchase order to the receipt of the inventory that would happen with a bill. So you would expect then we'd have the purchase order, then we receive the goods, and once we receive the goods, it would have a bill attached to it, right? And we would take the goods and we would enter the bill at that point in time. And then, of course, we would pay the bill in a similar fashion that we have done in the past. So I'm going to go back to QuickBooks Online and just take a look at this. If we go to QuickBooks Online and we open a new item, we would be in this case, the vendor section, and we're looking for the purchase order. So we have the purchase order, and we would fill in the purchase order here. I'm not going to go through it in this example because it's a little outside our scope right now. However, we will get into purchase orders when we go through the example problems. Just remember, it's basically a request. We would be sending it to the vendor, And it's important just to note that there's no financial transaction related to it. When you do fill in the purchase order, note that you're going to have to be ordering the items, and these are going to be inventory items. So once again, just like with the invoice and the sales receipt, we'll have to get the concept of what is an item, how do we enter an item into the system. So I'm going to scroll back up. I'm going to close out the purchase order.